afternoon, everyone, and welcome to Stock Market Today. It's Alyssa Corum here, and I'm joined by Ed Carson. We're going to break down the action in the market today. The NASDAQ showing particular weakness, Ed, but there are still some areas that are showing strength.
Yeah, that's right, Ali. A lot of old economy names doing pretty well. Rio Tinto, Caterpillar, and Goldman Sachs are all near buy points.
Okay, well, let's kick things off with a look at the NASDAQ, which suffered a pretty sharp loss today, down about 1.9% by the end of the day. The S&P 500 down about 0.6%. The Russell down 1.2% or so. The Dow managed to eke out a small gain. But Ed, just when we thought that the market was just moving nice and sideways here near highs, the NASDAQ gets slapped pretty hard with some headlines of Janet Yellen warning of higher interest rates.
Yeah, I mean, the market was selling off already, certainly the techs were, and then Treasury Secretary Janet Yellen, who used to be the Fed chief, said, yeah, we may need higher rates because, the economy's picking up and we're spending a lot of money at the government, really fueling the deficit. But the NASDAQ did find support at the 50-day line. The fact is that tech stocks are just not looking good. For a while, Tech Titans sold off pretty hard today, but a lot of the underlying components were already weakening in the last few days, and now it's become obvious. Yeah, we're back to the March highs. Again, it hasn't broken down, but I think what's worrisome is it seems like we're now back to the split market. For a while, in March, we were talking about this bifurcated market where the techs were weak and some old economy reopening plays were doing fine. That just is really tricky because you don't know which is going to pull which. Is it going to pull this? Is everything going to get pulled down, or is it going to get pulled back up again?
So a very tricky market indeed. We do have the NASDAQ still above its 50-day line for now, but with today's sharp decline, if we happen to see another sharp decline tomorrow or by the end of the week, if the NASDAQ is below this 50-day line, that seems like a pretty clear deterioration, which at first we were saying, well, overall, the NASDAQ might look fine before today, but underneath the surface, we had been seeing a lot of this turmoil. So now it seems like it is really widespread at this point in terms of the NASDAQ.
Yeah, and a lot of the growth names, were already falling below their 50-day lines, or certainly today. Definitely see that in the ETFs that we track with a lot of growth stocks. And so, the 50, which, it bounced above its 50-day line, partly because of non-tech names. There's some non-tech names in that 50 that are doing well, a lot of financials, including Goldman Sachs, that held up or actually rose today. But definitely some of the clear tech sectors really hard hit.
Right. Well, let's take a look at some ETFs that track the other major indexes. We have the Dow here coming down to its 21-day line, reversing higher, again, eking out a gain, holding near highs. The S&P 500 fell about 0.6% on the day, but found support at its 21-day line. What do you think about that?
That's pretty good when you consider some of the tech names that are in there, in Apple, Amazon, Facebook, Google, Microsoft, NVIDIA, and on and on and on. They were all down pretty sharply. And so the S&P down 0.7%, bouncing off short-term support. That's pretty good.
And a little bit of support here for the Russell 2000 as well, at least trying to hold on to that 50-day line, but support there potentially in question this week.
Yeah, I think it's going to be really important to see how the NASDAQ and Russell do. They're clearly not leading, but you don't want to see them breaking down.
And among other ETFs that we track, IGV, so tech, software getting hit very hard, chips also getting hit hard off the lows, but still down pretty sharply for the day. And ARKK, which is tracking a lot of the speculative growth names. Wow, this is really deteriorating. And now the 200-day line support there in question for this ETF.
Yeah, it hadn't touched the 200-day line since last April. I mean, April 2020. And back then, the RS line was at new highs because it was leading the market. And now the RS line is at like a 5-month low. just they're all, I mean, Tesla's the biggest holding, but Tesla actually looks better than a lot of the other names in this group. I mean, there's a lot of, the speculative growth never really came back, and it's falling among the hardest now as techs slump again.
Most definitely. So non-tech has definitely been the most successful strategy this year. So a mining stock that we are continuing to watch is Rio Tinto. Ed, talk to us about the setup.
Well, it looks pretty nice here. It's a little cup base here. It's now done a little shakeout, a handle. The handle doesn't provide much of a lower buy point, but it does shake out maybe some weak holders, because when you have a cup base where you run up from the bottom, it's just the potential for a pullback is pretty high. The RS line, it's off its highs, but then anything that had consolidated is going to be doing that. But you look at it, if it breaks out, presumably it would be above the handle high. And there has been a decent trend on this one, going forward. So the numbers growth has picked up. I mean, the EPS rating is already 94 because it's had these rebound in earnings. That's set to continue at least through this year. Iron prices, copper prices, commodity prices are strong, and that's just an area that's should be doing well.
So we'll be on breakout watch for Rio Tinto. And Caterpillar is another stock. Ed, I feel like you've been talking about this base pattern for the last couple of weeks, making sure it stays on the top of our radar. And now we did see a nice bounce, earnings out of the way, and a gain of about 2.4% today. Not too shabby.
Well, I think part of the reason I bring it up is if other people don't bring it up, I don't want to repeat the same stocks every day. So I may be repeating them, but at least
it's great to keep something like this top of mind.
Yeah, I mean, it had a nice rebound off the 50-day line. Sometimes stocks have a bad reaction to earnings, but it didn't break down. It found support of the 50-day line, and now it's bouncing back. If it gets above the last week's high, that could probably be seen as an early entry, not that of an early entry because the actual buy point will only be a couple bucks above that. The RS line is pulled back just a little bit, but not much at all. And you can see it had a really nice run. Earnings and sales are rebounding. They beat views last time, so it looked like a pretty strong report. Strong earnings are expected, this year and next year. So there's, mining, construction. These are areas that are doing well. This is obviously one of the reasons why the Dow turned positive today, this one and Goldman.
And Caterpillar has had a relatively strong move since last summer, but I guess put that in context for us. Does it still feel like it's in the earlier stages of this move here, whereas a lot of the stocks that we were paying so much attention to in 2020, or at least the early part of the Corona rally, are not performing well right now?
I mean, it's hard to say. Look, it's had a huge run. It's doubled. It's above its pre-pandemic highs. The earnings aren't expected to get to pre-pandemic levels until next year. At least they are getting there. A lot of airlines, who knows when they'll ever get to, say, 2018, 2019 levels. But so there can be a question of that. I think that's a question with all of this, is what should they be valued? Because you're seeing such big moves for some of these stocks that, but that haven't done that. But you can imagine that with all the spending and with the global growth going so fast, that earnings are really going to be strong for this stock. And so, I mean, it's paused for a little while, taking a little break, so I think it definitely could have another run here.
All right. And some nice tight action in the base, which is always good to see as well. And you mentioned Goldman Sachs. So let's check in on this financial name. We have a base forming here, some tight action as well in this base. So what do you think about Goldman here?
I mean, a lot of banks are doing well. And so you should be taking a look at a lot of different banks. This one probably doesn't benefit as much from higher interest rates because it's more just investment banking. Probably had some early entries along the way as it bounced off the 50-day line, or maybe as it sort of cleared sort of a short-term resistance a couple of weeks ago. But, it's right below a buy point, and this cup is really shallow. You could call it a flat base too. It's 11% deep. So, that's nice. I was right, that 50-day line from a few months ago. So it's set up again. The earnings have been really strong. This one should have, strong growth in 2021. So this one is actually on Swing Trader, and not too often do we have bank stocks. If you can get Chris Gessel to say anything positive about a bank stock. And he's actually put a number of banks on swing trader or leaderboard in the last few weeks because those are working. And so investors just need to set aside their preconceptions about what it will lead, what is leading. Don't try to say this is what's going to lead because that led last year. You got to look and see what's leading now. And these are the kind of stocks, these are the kind of industries that people should be looking at. It's something that David Ryan was stressing today on IBD Live. It was a fabulous show. I'm glad I was having to take notes for the recap because I wouldn't have wanted to miss that at all.
Most definitely. And one of the points that he was making, which is what you are, is to look at what's working now. A great way to do that is by focusing on that relative strength line, stocks that are outperforming the market. That is so key, as well as taking a deeper look at that price and volume analysis and just refocusing on the top industry groups. And as you were saying, Ed, not just what was working last year. And it seems pretty clear that bifurcated market, at least for the time being, appears to be back on. And on that note, we will leave it there. We're going to have a leaderboard scorecard, the team breaking it all down. Make sure you tune in for that at leaderboard.investors.com. Signing off today. We'll see you back here tomorrow.